Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it's Friday, the 26th of February. Just one more day to trade. That's on Monday. But it's been a heck of a month so far. Very volatile, much like January. But we're going to look at some of the markets and show you what we see in the bigger, longer-term picture. We've talked about gold before, but I want to reiterate what we were talking about. Here we are. Spot gold. We think it can pull back and offer a great trading opportunity and long-term investment. We still think that the potential is for this market to go into a multi-year bull market. A couple of things you want to look at. We're losing momentum on the RSI. This is the ideal place, the 50 line, which is right here. See how it stopped that support right there? That's an ideal place for us to buy. So that's one of the areas we'll be watching in the next couple of weeks to see whether this pullback can actually get back down to what we think is this long-term positive line, and also a Fibonacci retracement level, which is 38.2%. So that would be like a picture-perfect scenario. When we come down to this support line, we're at the 38% retracement, and we're at the 50 line. That would be like a no-brainer. But also, you want to watch the trade triangles because they've been very, very good. It's a plus 90, indicating the trend is still positive in gold. You want to watch the daily right here. If it goes below, that turns red, which would be like that. So you want to be basically out of the market if you're an intermediate term trader. Longer term, both the monthly and the weekly is still positive, indicating that the trend remains positive on the upside. If you haven't seen our analysis of this market, you may want to take a look, gold in-depth look we had, report that we did in terms of where we think cycle-wise this could happen. We could see a low sometime in maybe the April-May period. So watch that very, very carefully. Now here we have the Dow, and you can see there's a mixture of the red, the monthly, the longer-term trend remains negative on the Dow. However, the intermediate-term trend right here is positive, 16,510. Currently trading at 16,698. So it's up just a little bit, but nonetheless, it really is interesting to see what's happening. So the key thing is here is to draw the Fibonacci retracement level. So drawing from here to here, you can see we're getting into that what we call thin air today. In terms of this is where the market should begin to move into sort of like a trading range, which is a plus 60. You can see that right here, and really chop around for a while, and then eventually start moving back down. A couple of things to look for is that certainly I think the 17,000 level is going to be like a rock right now on the upside. I don't even think we're going to get there. I think we're just going to chop around for a few days, maybe have up days, down days, but really no discernible trend, and then eventually just roll over to the downside. And I think that's the key to look at in terms of how these markets work. It's kind of like we chopped around here, then we just eventually roll down to the upside, the downside, chopped around here, and then roll down. And I think we're going to chop around this area here and just roll down. But generally speaking, the longer-term trend for this market is on the downside. Well, here we are. We're looking at the NASDAQ, and the one thing I want to bring to your attention, if you can just draw this freehand, there's a long-term trend line right here that actually goes to there. So right here. So this is definitely, this low that we saw just a couple of weeks ago is definitely a key low. But the other thing I would share with you is this Twin Peaks right here, this pivot point. You can see this is not going below this area and coming back. It's not a good sign. I think eventually we'll break this line. Now, once we break this line, this is over for the time being, and we're going to see a pretty long bear market, which could take this market down much lower, possibly to even 2,600. Certainly to, I think, the 3,000 level would not be out of the ballpark right now. But let's see how that plays out. But watch this long-term line right here. This is definitely a key thing for this market. This is crude oil. You can see crude oil has just been going sideways, really no direction. I think that's the important thing to look at. You put our triangles on, you've got obviously the weekly and the monthly still negative, the daily positive, indicating you should be on the sidelines. You can see that just kicked in, but it looks like just a broad trading range without any really strong direction. As I said, we talked about this box-like trading range it's in right now, and I think that's going to kind of hold the market for a while until things really do rev up, or we go into a recession or a boom, and eventually this market will move. Eventually this market will move out of this box. That's a promise. We're looking at the S&P 500. As you can see, we have a green trade triangle that just occurred yesterday, and also the monthly red, meaning a trading range. So plus 60 indicates a trading range. And the one thing I want to look at here again is going to be this long-term trend line that really does support the market. So you can go from here, just draw this freehand, but you can see these points here, very, very important points. This last one, that's why I think we bounced. But you also have this Twin Peaks and pivot point indicating lower levels. And I think potentially we could go lower just based on the Fibonacci. This has been a 6-year bull market, actually almost a 7-year bull market. And bull markets don't last forever. So let's just see if we can get our Fibonacci on there. We can get down to the 1400 level, which would not be too much of a problem. Well, that's it for today. We've got some volatile markets. We'll see what happens on Monday, but I hope you all have a great weekend. The market's going to be here Monday, and they're going to be here all year. So stay disciplined, stay nimble, and have a great weekend. Thanks for watching.